Morning, friends. Welcome back to the State of the Market Live. This is episode 6, and today is June 14, 2022. Thanks for coming back. Morning, friends. Welcome back to the State of the Market Live. This is So today we'll have a fresh look at the market because we have been through some kind of decent fall and we are at a key support zone. So whenever there is confusion in the market, what you have to do is you have to take a step back and then look at the longer term charts, what they are doing. So today we'll have a look at the weekly chart of Nifty futures and see what they are saying. We see that we have repeatedly for many weeks here and here, we have repeatedly tapped the 15,770 zone, and yesterday too, we kind of tried to break it, but then we closed above 15,770. So this particular support is a very strong support. A break of this can only lead to 15,522. So this is the kind of support that we are looking at. So once we break at 15,770, the next support that we have to focus on is 15,522. If 15,522 is also broken, then we are entering a serious zone of recapitulation because 15,522 comes from the weekly charts and it is such a level where long-term investors in the cash market should come back in a big way to enter. If they do not come, we can see far lower levels on weekly charts and Nifty can fall further. We can even go up to 13,805 and 14,700 levels as well. So the key to this week after the Fed policy on Wednesday, that is tomorrow, is 15,522. If we do not take a sharp support, then we are going to look at deeper levels of 14,700 and 13,805. That doesn't mean you should become negative on an intraday basis. On an intraday basis, we have to see what the market is doing. For example, tomorrow is Fed's policy, and the market may reposition itself to do something different. As of now, what the market can do is it can stay in the range that it has formed yesterday. Yesterday, it has formed a range of 15,946 and 15,670. So today, we can again follow in this range until the Fed's policy is done. Until the Fed's policy is done, probably the market will give a chance for for players to reassess above 15,950, above 15,950, or below 15,522. So we may travel today. We may kind of trade in this zone or below until 522. 522 is a very strong support, and it is not easy for the market to break that. If at all it breaks for any reason, because most of the stops get hit near 15,522, and below that we can look at lower levels. On the upside, the market will try to break this particular zone of 15,951 and fill this gap. We should also bake in such a hypothesis when we are going into the market today. So on a broader basis, we have to look at this particular zone or this particular zone or this zone. So we have three hypotheses. One, we can open within range and form a balanced day today because tomorrow is a Fed event. Or we can break 15,770 and then travel towards 15,522. The first zone that we have to look at is between 15,770 to 15,950. The second zone is 15,770 to 15,522. And the third zone, the third probable zone is a filling of this particular gap. Now we have formed this gap. Only a good strength can lead into this gap. Until then, this particular gap should act as your resistance for the next 2 to 3 days. Tomorrow we have Fed event, and day after tomorrow we have expiry. So for the next 2 days, our focus should be, this should be zone 1, this should be zone 2, and this should be zone 3 in the order of such preference. So we can actually mark it. So this is the kind of zone 1, and then this is zone 2. So if you are confused, either today or tomorrow, you can come back to the video and check what are the probable zones that the market is going to play. So the probability of zone 1 happening is more, and the probability of happening zone 2 is a bit less, and zone 3 is far less. But that does not mean that we won't go there. We will certainly go there. But it depends on how the intraday players are taking the market. So the long-term players will keep observing what intraday players are doing, and they will align their strategies as per them. For example, if they see a lot of demand coming in zone 2, they will wait and let the market fall to 15,522 and then step into the action, whether on buy side or sell side. And if they want, if they see intraday players too eager to fill this zone, they will let them go there, fill this zone, and then there will be a fall. So that is how the auction market works, and that is how large players take advantage of the market. So when you are going into the market, what is our focus today? The number one, because SGX is kind of trading in between, just a minute. Yeah, SGX is trading between 15,770 and 15,522. So our probable zone is something going to be like this or this. So if we look at pre-open, we will get further confirmation whether the market wants to trade in zone 1 or zone 2. As of now, we are trading in zone 2 in SGX, but at pre-open, it can be something different. It can be 15,800 or 15 above 15,770, or it can be 15,680. It can be anything. So as a trader, you should not become biased when you are getting into trading. You need to collect all data points, and then just before you take a trade, you need to assess the weight of such information and then get into action. Whatever your strategy is, whether you are following candlesticks, whether you are following any particular indicator, or whether you are following market profile or order flow or anything, your strategy should be common. That is, you should plan your day as per the market's moves on all time frames. On all time frames, especially when we are in a little crisis like this, when the market is worried what to do, that is when you have to bring focus into the long-term charts and then work from there. See how we worked from weekly chart, then to daily chart, and then we are getting into intraday. Let's see what happened yesterday and what could happen today. You see that on an intraday basis, we are slightly below the short-term moving averages. This is 50 and this is 200, just below this. So basically, when we are trading below 200 means we have to be very careful. That means you see that the moment we closed below 200-day moving average, you see how the fall has, how the fall was with a gap. See, the moment you see this here on a 200-day moving average, when we close it above that, there is a gap. And when we closed below that, below a 200-day moving average, you see we are again trading with a gap. So this is the kind of information that we have to carry with. So yesterday we saw a lot of traction on the downside. Now today, what we are going to do is we may trade in this range, in this particular range, or we may trade below this, or we may trade above this. So basically, if it has to get traction on the upside, I would look for the market to open somewhere above this level. At least I want, yesterday in our live commentary, I told you that we have to break at least 830, at least 830. We need to break at least this level for longs to take action. And once we go above this level, we need to break 1615, 950. And then we look for 16023 or 1605 levels. And then we have to look for this level. See how logically you have to think before getting into the market. If we are opening here, if we are opening in this particular zone, we have to see whether the market will break downside or whether it will break upside. So I will look for a break of 15,830 or 16,15,665. Until then, I will not do anything. Once it breaks down, then I will get into my zone where buyers will come into action. So basically it is 15,522. So this is the kind of zone that we have to look into while trading. So what is the zone here? Let's again mark the zones for logical thinking rather than getting into action without knowing what we are doing. So this is the zone 1 I will look for. And then once, if the market does not trade there, what I will do, I will get into my zone 2 of 15,522. So basically let's keep it, let's not be exact because this is a triangle. So this is the second zone where I will be looking for. So you need to be logical. Otherwise, you will end up trading very illogically or irrationally and end up raking in losses. The third zone that I will look for is zone 3. This is the third zone I will look for. Zone 3. And then from here, if the probabilities are higher, if the market breaks the day high, I will be looking for 1603. So this is the fourth zone I will look for. See how logically we are deducting where I can think. But most of the retailers, what happens? They will go into the market without a plan and they want to make money without any rationality. So here, what we are trying to do as a trader, we are trying to build rationality. The market is always irrational. It doesn't know what it is doing. It's like a mad cow. So how do you kind of build a plan for your mind? The market may be good or bad, but your mind is always bad. Remember that. Your mind is always bad. It is always irrational. Even if you are thinking good, the mind inside you keeps playing with your decisions. That's why our decisions are always risky. Whatever decision you take in life, it always carries some risk. For example, if your decision is to step out of your house, the risk is there can be rain, or there can be severe heat, or there can be some kind of heavy traffic. So every decision is laced with the risks. So how do we control risks? This is how we control. We develop a plan of action. What is my plan of action today? Today, I am going to look for zone 1. And then I am going to look for zone 2, where the market will open. So first, now I have 688 as one data point in SGX. So what I will do, my probable zone is basically here, zone 2. But in pre-open, if it shows zone 1, my bias will shift to a bit higher side. If it doesn't, then I will play in this zone. So this is the key zone where I look for support. And mind you, if it breaks 15,526, then we have to go for levels which we discussed on weekly charts like this. So we have to look for, just a minute. We have to look for weekly charts where we are looking at a key zone of 14,700 and then 13,801. Not today, but if at all it goes, we have to keep our zones ready. So on an intraday chart, so I'll be ready with zone 1. If it breaks 830, remember these levels, we will go to 950. And if it breaks 950, these are the probable zones we need to look for, depending on what news is coming out. Tomorrow we have Fed decision, and day after tomorrow we have expiry. So on a broader scale, I am looking for the market to travel in this particular zone, in zone 1 and zone 2. That is how you go to the market with clarity of thought. And from there, you will work on how trade should be generated for yourself. Now, let's look at Bank Nifty. So in Bank Nifty, the situation is a bit dire. When I say dire, it means it's a bit dangerous because we are the market is the current news environment, which is higher inflation across the world, is going to hurt banks because money is going to become very costly. So for banks, a cheaper money environment is always profitable because they take money cheap and then they give loans on the at a higher cost. But when money itself becomes cheap, the first thing that is going to hurt banks is their margins. That's why most of the banks, including SBI, are getting hurt now. But what my doubt is, if banks are getting hurt, then why are HDFC and HDFC Bank strong? So that is one key data point where I will be confident about a rebound in Bank Nifty. Let's see what is happening on the weekly charts of Bank Nifty. Again, in Bank Nifty 2, we are at a key support zone where we need to be very careful. So this particular point, 32,873, is the level where I will be very careful. You see that we have consistently kind of taken support here. However, we are forming a lower high. So any pressure here at 32,873 is going to take us to far lower levels. So what are the lower levels that we can look for? So we can look for levels which are around 32,000. So this I already mentioned in my channel as well as in previous YouTubes that any fall can bring almost 2,000 points fall. I told you that below 35,311 we can easily fall 2,000 points and see that we are already half the way. So 32,000 is the key level that we need to look for. This is on weekly charts. Let's see what is happening at a daily time frame level. So on a daily time frame, what we are going to do? So basically, this is the key support that we will play with. So this is the kind of zone that you have to keep in mind, which is between 32,200 and around 33,000 levels. So if we see more negativity tomorrow, if there is higher than expected rate cut from Federal Reserve, then we can see a lot of traction here on this zone. Otherwise, we will follow this particular zone. So we will stay in this zone. Sorry, just a minute, guys. So we will just follow in this range. Generally, what happens is whenever there is an event, whether it is RBI event or a Fed event or any kind of event, what the market does is, what large players do is they control the market within a particular range. So most probable zone for today can be a balance within this zone. We can form an inside bar as well. So let me increase the size so that you can have a look at. Sorry. So basically, we can form an inside bar today if they want to control and take decision tomorrow after the Federal Reserve event. So we may form an inside bar. That is one probable zone. Otherwise, we can go to this zone or we can fill the gap. Same as in Nifty. So there, what are the three probable zones? Zone 1 is going to be yesterday's bar. Zone 2 is going to be the region below this, and zone 3 is going to be the gap above. It depends on, again, as the market reacts, you need to change your levels. Now let's see what is happening on an intraday basis. So here we'll mark the zones. So these are the zones you can look for. This is one zone. We'll mark for Bank Nifty as well, so that during the day, if you are confused, you can come back to the video, check this part, and then mark your levels. So basically, we are looking at 33,000 break. So this is zone 1, which you should look for. And then you look for zone 2. Because there is a lot of negativity, we should give importance to the level below that. And zone 3 is any positivity above this. That means on after the Federal Reserve or an expiry, we can look for, we should keep this particular zone. So any option seller should be careful between these levels. I will sell calls above 34,500 and sell puts below probably 33,000, or if we break this zone also 32,000. So I see a fall even below 32,000 if there is a lot of negativity. So these are the kind of zones that we have to look for on a daily time frame. Now what happens today on an intraday level? Again, any action that should happen immediately after the market should be above this level, or above this level, because the 20-day moving average is right at 3402 and the gap is very small. If you notice, the gap in Bank Nifty is pretty small compared with Nifty. The gap was very large. Okay, so that is one of the key point which I'll be careful about, because HDFC Bank and HDFC are were pretty strong yesterday. Even if the market was falling, they were not. So today I'll look for the zone immediately after open. It should be somewhere in between this. If it is below this, I'll be a bit careful until 32,200. So this is the kind of zone from daily chart that we have to mark for ourselves. And below 32,200, we can go even until 32,000. We should be ready for such negativity. So if the market is negative, this is the first zone, and this is zone 2, and this is zone 3, and then this is zone 4. So basically today we can, if we have to make a kind of intraday move, what happens is today there will be an inside bar within this range, within zone 1 and zone 2. What happens? Why does that happen? Because before an event, what many retailers think is there will be a big move. But what large players will do is they will take all the stop losses on both sides and they will end up moving in a small zone. Most of the option buyers or small players who are trading intraday, they will get stuck here. Again, tomorrow, they will be with a confusion whether it will go down or go up. But we should not be confused. If the market is trading within this range, you just sit back and relax. And once we break somewhere here above zone, in zone 2 or in zone 4, we should get into a trade. In between this, we should not touch. In zone 1, you're not going to touch. In zone 2 and zone 4, you look for intraday opportunities. And in zone 3, you should be very careful whether there will be a rejection here or kind of continuation from here, because again there is a magnet level of 200-day moving average here, and we can try to touch those levels as well. That's for Bank Nifty. Let's see what is happening in Reliance. Again, surprisingly, yesterday market was negative, and you see Reliance was positive. Similarly, HDFC Bank, everything was positive. So what this indicates is that as the market is falling, long-term players are buying in the cash market. They have been, in fact, order flow shows that they have been buying Reliance between 20 points, and between 20 points means 2640 to 2660. So basically what I expected last time is when we break 2750, we will get into 2650, at least to 2650. That was my expectation. Now, if we are more negative, we can even break 2600 and 2500. And you see how a large player on a particular day has marked his zone. Basically, they are trying to accumulate a lot of Reliance stock in this zone. Only a break of 2500 can lead to a lot of negativity. Otherwise, this is a kind of accumulation zone for large players in Reliance. Let's see what intraday moves or see. So you see that on a daily time frame, the 200-day moving average and the 50-day moving average were just, kind of just above Reliance. So this is the kind of information that you should glean from intraday charts. You see this, how below 200-day moving average and 50-day moving average, large players have been accumulating it between 2620 and 2660. Very clean buying from lot of large players. You see how they control the momentum. They first reduce the momentum and then they collect from retailers. So here retailers will be giving in terms of stops, whether daily time frame retailers or intraday retailers. When I say retailers, basically leveraged players. Don't think that it is common man. In market, there is no difference between rich and poor. It is only people who are leveraged and people who are non-leveraged. For example, if I have, let's say, thousands of crores and I am taking leverage, I am still a small player. But if someone has large capital and he is not leveraged, he is large player. He is the player who has the edge. Most of the time, leverage players are cornered. That is what happened in Reliance. And today, a break of 2681 will bring confidence on the upside. Otherwise, we need to break on the downside. Let's again mark zones for Reliance, how we trade. So we're not going to do this every day, the zoning levels, because this is what you have to practice if you want to make it a habit with a discipline in trading. So basically, I'll mark 3 zones in Reliance. So when I will trade depending on the open. If the market is trading within the zone, this is only a scalper's market. Basically, here you should trade only if you are a scalper. In zone 1, you just scalp. You are not going to kind of look for long trades here because you will not have the wiggle room to trade here. So break of 2620 can bring a decent action to 2580 levels, and a break above 2680 or 2670. This is the zone where there will be many stops. People would have shorted the market and kept their buy stops here, and they will be taken for a right. So we should the Reliance should cross 2680 for it to go above 2720 or 2730 levels. Basically, I'll look for a swing high near 2730. So this is my third zone. If at all we look for any positivity, this is the zone I will go with. Like this, we have to strategically plan for the day and then trade. You should not trade haphazardly and at any level or at any zone. Remember, guys, in trading, location is the most important thing. Location, trade location is very, very important. You're not going to trade anywhere and everywhere. For example, if you want to kind of sell sweaters or jackets for winter, you are going to sell where winter happens most of the time. You're not going to sell it in places like Rajasthan or places like kind of where the heat is more. You're not going to come down south and sell your sweaters, because trade location is very important. If you trade everywhere and anywhere at any location or at any price, you do not have edge in the market. You should learn how to wait for a trade and then take it only when there is some narrative around it. You need to build a story around it. Why it will rise, why it will not rise, when it will hit my stop loss, when it will trigger my entry. So these are the things which you have to plan. Hope this episode of State of the Market is helpful for you. So come back to the video during the market day if you are confused, and have a great day. Be safe.